The maths is clear. Crude oil has to go higher and it's going to drag the US dollar and interest rates higher with it. This is the latest note from JP Morgan. They've done the maths on this and what they highlight is that the current demand destruction for crude oil is at 4.3 million barrels per day, which compared to the great financial crisis at its peak was only 2.5 million barrels per day. So this is super important to understand going into next week, because if JP Morgan have done the maths on this, so have the Federal Reserve. And coming up next week, we've got 5 interest rate decisions, including FOMC. So for those of you new to the channel, my name is John Fortune. I've been trading financial markets for over 18 years. And in today's video, I'm going to show you the major technical patterns in both the DXY and the JPY going into not just FOMC, but also the BOJ next week. And I'm going to share with you my trading plan, showing you the key buy and sell zones in the Forex markets. And we're also going to look at some of the key breakout levels in the more volatile markets, such as Bitcoin, Ethereum, silver, gold, and crude oil. Okay, so let's have a look at the DXY, because there's something important to note here going into next week. I've overlaid the weekly candles on the 4-hour chart and the monthly candles on the daily chart. And what do you notice about last week? We had an inside week, so we're getting a contraction of volatility. So this is not surprising because we've got 5 interest rate decisions, including FOMC, coming up this week. But this is super important to take note of going into next week, because when you get a contraction of volatility, what follows it tends to be an expansion of volatility. We could get very volatile markets next week. And this is key because when we go through the buy zones and the sell zones, you also want to take note of the second upper and lower bounds next week, because when you have a catalyst or an interest rate decision, very often the markets can push all the way to the second upper and lower bounds, or the top of the buy and sell zones, and that's where the opportunities come from. So we'll be looking at that in today's video. But notice how we had this inside week, and when you have an inside candle, it can actually be a reversal, or it can be the start of a bigger continuation, because all it's really showing you is that indecision has taken place and it's awaiting the next move. So this is likely to come on FOMC next week. So with the dollar pairs, when we look at portfolio selection, you'll see I do primarily want to be on the short side of the dollar. If we get a very hawkish Fed, I would prefer to look at the top of the buy and sell zones. But there are some currencies that we can also look to the long side, and we can trade FOMC next week reactively. One of those is the Japanese yen, which is right on the precipice of a major sell-off, as we've been talking about in previous videos. And if JP Morgan's math checks out, and crude oil is going higher, this of course will be very bearish for the yen. So before we look at the portfolio selection, what I want to show you here on the daily chart is also this. We have forming an inverse head and shoulders going into FOMC next week. On the right shoulder, so it's a weekly inverse head and shoulders, we're also now seeing volatility drying up, and this is very easily where we could see this reversal week next week. So generally speaking, when you have an inside candle, you trade the breakout of that candle. So you would wait, and if you get a breakout to the upside, you would start to look for trending moves to the upside. And if you get a breakout to the downside, you start to look for selling opportunities to the downside in terms of a breakout. And the reason for that is because if you stay within the inside candle, all that's happening is volatility is drying up even more. And if you get involved before the breakout, you could be on the wrong side of the breakout. You could go in the opposite direction. Remember guys, if you enjoy these videos or you feel you get any value at all out of them, be sure to like, share, and especially subscribe, and also to hype if you're using a mobile device, because it really helps the channel when you do that. And I want to say a big thank you to everybody who has subscribed to the channel so far, all of you who comment on a regular basis, and everybody who likes and shares on a regular basis as well. Okay, so let's have a look at the portfolio selection heading into next week, because there's 2 things that we need to pay attention to next week. 1, what do we trade? And number 2, when do we trade it? Now, the when do we trade it is even more important next week, because we've got 5 interest rate decisions. And what happens is when you have interest rate decisions, volatility tends to be restricted before the rate decision. So mean reversion strategies tend to outperform. And on the interest rate decision or after the interest rate decision, you get an expansion of volatility. And that's generally speaking when you'd want to switch to breakouts, or maybe even sidestep some of the mean reversion stuff, or look for deeper tests of the buy and sell zones. So let's take question number 1. What are we looking to trade next week? Well, personally, I'm looking at the Australian dollar as number 1, the Japanese yen as number 1 to the downside. So Aussie as my top long theme, and the Japanese yen as my top short theme. Now, what's super interesting about this is the currency markets are talking, and what they're saying is we are setting up for an inflationary regime. This is why we're seeing stocks ripping higher. Crude oil is set to go higher, and the currency markets are picking up on this and they're positioning for it now. How do we know that? Because in inflationary regimes, when the Forex market expects inflation, you see commodity currencies start to outperform the EU majors. And what we're seeing here is exactly that. We have the Aussie, the CAD, and the New Zealand now all sitting at the top of the performance metrics in the quantitative analytics. And so going into next week, even though the yen is at the bottom of the pile, and again, if we get inflation, this is going to be bearish for the yen, I do want to focus on a couple of different themes. So the commodity currencies versus the EU majors is something we'll be looking at in today's video. We'll be looking at those pairs. So one of those, for example, we're going to look at is EurOCad to the short side next week. But alongside that, I also am interested in trading some of the commodity currencies against each other, because if commodity currencies are strong or outperforming in an inflationary regime, they should hold their ranges against each other. You should lack direction. And we can also do that to the short side with the EU currencies. So two EU currencies against each other should also hold their ranges and kind of chop around more than, you know, some of the commodity currencies versus EU majors, which should be more directional. Now, the other thing to note going into next week is the US dollar. The US dollar is currently underperforming. It is starting to tick higher. And I am still interested in some potential US dollar shorts, but I would really want to see these start to come in early next week. So before FOMC, if we start to get the US dollar pushing into a buy and sell zone on Monday or even Tuesday, this pretty much gives us, you know, 2 full days into Wednesday evening, and those dollar pairs should really hold their ranges going into FOMC. And then on FOMC, you get the bigger breakout and the volatility. So we do need to be a little bit careful. There's certain ways I would like to trade the dollar next week, and I'll show you that as we go through the video. The one currency I really do not want to buy at all at the moment is the Japanese yen, because it's on the verge of a major breakdown. If crude oil is going higher, this does mean that the US dollar will probably flip higher as well, because you tend to see the commodity currencies doing well, and the US dollar does well alongside the commodity currencies. So the dollar goes up and the commodity currencies go up, and the EU majors and the Japanese yen suffer. So that's what we're going to be looking at in today's video. We're also going to be looking at some CAD longs. We're going to be looking at the New Zealand, which is my third favorite long theme. And alongside the Japanese yen, we're going to be looking at the euro to the short side. But we can also look at the Swiss franc and the pound, because these are the EU majors that tend to underperform when we get inflationary regimes. So we'll be looking at some of the commodity currencies against each other, the EU majors against each other, and some of the commodity currencies versus the EU majors as more of a trend, kind of buy the dip or sell the rip opportunity next week. Okay, so let's have a look at the dollar pairs, starting with Aussie dollar. Then next we're going to look at euro dollar. Now, very straightforward. I'm looking at two things in Aussie dollar next week. If we get a test of the 0.7064, this is where the buy zone starts. And if we get this before FOMC, there is an opportunity to buy the dip. But the only problem with that is it's higher risk, because if you don't get out before FOMC, you could be on the wrong side of a much bigger move. So I would prefer to trade these markets after FOMC, and this is what I'll be looking for. If we get early tests of these buy and sell zones, perhaps there's an opportunity to buy the dip, but you have to be nimble. And if we get a neutral outcome from FOMC, so the Federal Reserve comes out, they just kind of, you know, talk out the corner of their mouth, which they like to do sometimes, speaking without really saying much, then essentially it's like there's no interest rate decision at all. So we just revert back to a standard setup. And in this case, it would be a dip below the 0.7064. And this is where I'd start to look for a buy the dip opportunity in Aussie dollar. The next support's down here. So in this area, you'd have to drop down to the 1 hours and look for a kind of double bottom or reversal pattern. In other words, it starts to form its own support before trading into it and reversing. And again, all of these setups that we're going to be looking at, we trade these in real time with members throughout the week. This is not theory, this is real practical stuff. And all of these setups are in the free strategy guide in the pinned comment and the description below, which you can all download. Again, absolutely free. So the second thing I'm going to be looking for next week is if we get a bullish outcome from FOMC for the US dollar, then I'm going to look at the second lower bound, because if you get a strong catalyst from an interest rate decision, very often you will test the second upper or lower bound. Now, in this case, we've already discussed portfolio selection. I can't be short the Aussie next week. I'm not going to short the Australian dollar. So either I can buy the dip from the first lower bound at the 0.7064, on a neutral interest rate decision outcome, or I can buy the dip down at the 0.6976, and we have a really nice key area of resistance right here, turning support. That's where I can trade post FOMC if we end up getting a bullish response for the US dollar and we break out of the inside candle from last week to the upside. So those are the two things I'll be looking for in Aussie dollar. But have a quick look at the inside week. We saw this in a whole bunch of markets last week in Forex. Look at how tight that is going into FOMC. That's telling me there's probably going to be a big move from FOMC. We're probably going to see quite a strong expansion of volatility. So again, if you get a bullish outcome and this starts to push all the way down to its first lower bound, you might want to consider just sidestepping that trade. In a normal week, that's where I'd be looking to buy the dip. But in this case, we have last week's low right here, which would be a nice place to try and time a reversal for 1 or 2 days. We also have a prior week's high sitting right here, which is the other side of the second lower bound. So this is where I would ideally let the volatility take place. And then from here, I would look for a potential 1 or 2 day bounce to the upside. And the final thing, of course, you can look for next week is you can look for that breakout post FOMC. Now you have a natural breakout set up here because we're tucking into the 50 period moving average and the consolidation here is so tight. Now, if the Federal Reserve comes out and disappoints and we see the dollar sell off, so again, how can we make money next week regardless of what happens? That's what we're interested in. We don't care about predicting the future. If people want to predict the future, that's great. But we're focused on whatever happens, can we try and get a setup from it? And in this case, because the Australian dollar is the top long theme, any kind of disappointment from the Federal Reserve next week and a weakness in the dollar is going to set up a better breakout trade to the upside in Aussie dollar than the majority of other currency pairs. Euro dollar would probably also be very good because the euro makes up 57% of the dollar index. But Aussie dollar to the upside, this would be the breakout post FOMC if you get a bearish outcome for the dollar. So you can see I can only trade this to the long side, and there's 3 different scenarios there on a neutral, bullish, and bearish outcome that we could actually look for a potential opportunity in Aussie dollar. And what I like about this is you can see not only do we have a very tight range, which is likely to break out quite strongly, but this is also the prior month's high over here. So once we break this, it really clears out a multi-month range in Aussie dollar to the upside. Next is Euro dollar. Now this is really a market that I only want to be a buyer of going into next week. So I'm only going to be looking at 2 things here because one, if we get a neutral outcome from FOMC, especially as we have the ECB on Thursday, Euro dollar should hold its range. So I would like to see this come down. If nothing really happens on Wednesday, we get a test of the 1.16237. This prior high, which sits right in the buy zone, is where I'd be looking next week for a 1 or 2 day bounce to the upside. And you can see, for those of you who download the free strategy guide, this would be a range reversal play. So when the moving average is kind of in the middle of price, and we're oscillating, this is the kind of range play that we're looking for. So that's what I would like to see on a neutral outcome. That's what I'd be looking for. And if you get a bearish outcome for the US dollar, then the inside candle high of last week, this would become the breakout level at the 1.17904. So you get a really bearish outcome for the dollar. Look for the break, pull back, and you can start to look for the trend higher. If you look at euro dollar in the monthly, this is actually setting up potential bull flag. And in the DXY, it's a bear flag. But if it fails, it's going to turn into a big double top. So this is how you know that a big move is setting up in the dollar. And it's most likely going to be determined by an FOMC meeting. And that could be next week's FOMC meeting. So those are the 2 things I'd be looking for. Notice if we get a very, very bullish outcome for the dollar, I do not want to look at buying euro dollar, because if we get a very, very strong US dollar, then the euro is going to suffer more than some of the other currencies. So if I am going to step in and buy the dip in any kind of market where we see dollar strength and I short the dollar, it's going to be in Aussie dollar from the second lower bound. It's not going to be in euro dollar because this could tank quite hard. So I'm only looking for a potential buy the dip on a neutral outcome or a breakout of the weekly high on a bearish outcome for the US dollar. Next is pound dollar. Now going into next week, we have a really nice daily support in the buy zone here. But there's no real key support down here at the second lower bound. So what this means is a neutral outcome going into the Bank of England, I would be prepared to look for a potential bounce for 1 or 2 days from this area. Again, if you get in post FOMC and you take it through the Bank of England, you're going to have the risk of the Bank of England as well. So maybe you wait till Thursday to get involved with this. You know, if both of them pass fairly uneventfully, then we just default to the normal buy the dip in the buy zone, especially from a key area of daily support like this. But because there's no key area of support down here, and because this is an EU currency, if we got a bullish outcome for the US dollar from FOMC, this would not be one of the better opportunities to try and sell US dollars, because, you know, the euro and the pound are going to suffer more than some of the commodity currencies, for example. The commodity currencies may be more volatile, but the euro and the pound should suffer more and probably will struggle to bounce relative to the commodity currencies. So this is what I'll be looking for on a kind of neutral outcome from FOMC, and perhaps if nothing really happens into the Bank of England, you can look to buy the dip, because don't forget, interest rates in the UK and Europe are likely to go up as well. So I would not be surprised to see kind of hawkish outcomes from the Bank of England and also the ECB as well. And again, you can see really nice support down here if we get that buy the dip coming into Thursday, or even if we get a push down on Monday, then we have plenty of time between Monday and Wednesday to be in and out for this reversal. So that would be a pre-FOMC holding of the range. But the other thing here is, again, look how tight this consolidation is right at the 50 period moving average. So if we get a bearish outcome, so we get a neutral outcome, I would look for this. If we get a bullish outcome, I will leave pound dollar and I'll potentially look to buy Aussie dollar from the second lower bound. And if we get a bearish outcome for the US dollar, again, I would be looking at the high over here. In this case, the 135.442, that would be the breakout, the range breakout, and I'd look for an expansion week out of this. And, you know, most likely pound dollar, euro dollar would actually trend into the end of the week if you can get these strong breakouts from an FOMC catalyst. US dollar yen going into next week is a really important chart. Why? Because it gives us the other side of this story. And it really allows us to potentially trade a breakout in either direction next week. So I'll be completely honest with you guys. I do not want to sell this market under any circumstances whatsoever. I do not want to buy Japanese yen. And the Bank of Japan or the Federal Reserve, or the Bank of Japan and the Federal Reserve combined in a coordinated effort next week, had better do something to put this back in the bottle and to break this to the downside, because otherwise we are set for a massive breakout and most likely heading to 175 in my opinion. So you can see here we had this monthly breakout already after a kind of consolidation at the 50 period moving average. So this is very often where you get those bigger kind of trends from. We then had a breakout of this and we had a monthly kind of bull flag. The monthly bull flag has been broken to the upside and it's formed a weekly bull flag. This thing is set to go. All it needs is the right catalyst. So if we get a very bearish outcome from the Federal Reserve on Wednesday, then I would be looking for those breakouts higher in euro dollar, pound dollar, some of those commodity currencies, even Aussie dollar. But if the opposite happens, if we get the Federal Reserve coming out and basically saying, you know, something along the lines of what JP Morgan is saying, which is that crude oil is going higher, the inflationary outlook is actually not great, and they may have to hold rates longer than expected, then this is going to catalyze the US dollar higher. And it's US dollar yen that I would look for a potential breakout to the upside. And the 159.86 is where a new trend to the upside in US dollar yen can be born next week, with the right catalyst, either from the BOJ, but it probably won't come from the BOJ, but certainly from FOMC on Wednesday. US dollar CAD. Now, here are the buy and sell zones heading into next week in US dollar CAD. And if we look at the portfolio selection, this is really a short. Now, here's where we kind of go back to the portfolio selection and what we were talking about with Aussie dollar, because if we get a bearish outcome for the US dollar, then this market is likely to sell off quite strongly. So very much like you could look for that breakout with Aussie dollar to the upside, you could also look for the breakout to the downside in US dollar CAD, so US dollar versus commodity currency, if we get a bearish outcome from FOMC. We also have the Bank of Canada on Wednesday, so this market could get extremely volatile on Wednesday. FOMC comes after the Bank of Canada, so you know we're going to be discussing opportunities post FOMC. And this is also because it's got a commodity currency in it, and the Canadian dollar should also benefit from a higher oil price. If we were to get the DXY pushing higher and this pushed up like this, Aussie dollar would be selling off, euro dollar would be selling off, pound dollar would be selling off. But if you remember the EU majors, we wouldn't necessarily want to buy the dip, but the commodity currencies we could actually step in. And if we wanted to short the US dollar into strength, buying something like the Canadian dollar or the Aussie dollar, which also benefits from inflation, would be the better opportunity. So if we somehow manage to get absolutely nothing happening on Wednesday from the Bank of Canada or FOMC, then I would be looking for a push above the 1.37493. There is a really nice high just here in the 4 hours. This is where I'd be looking to time a potential short for 1 or 2 days. So a failed breakout above this high in the 4 hours for 1 or 2 days to the downside. That's if nothing happens on Wednesday. So it's an if-then process. I suspect we will get volatility and we'll probably get a bigger move out of the dollar one way or the other. So if we get a very bullish outcome from the US dollar, then I would look for the second upper bound to be taken out in this market. And you can see we have a really nice key area of support and a daily resistance of the 1.3877. So a big push up in the dollar because we get a bullish catalyst. If we push into the sell zone or through the sell zone into the second upper bound, then I would look for a potential short for 1 or 2 days from the 1.3877. Conversely, if we get a very, very weak dollar, so just like Aussie dollar, this has potentially 3 opportunities next week. You can kind of trade this on a neutral outcome, bullish outcome, or bearish outcome. But if we get a very, very weak dollar, then it's the 1.36308. I would look for a break below this low. It's not an inside week, but it's a narrow week. It's a small-bodied week. And it, again, shows a constriction of volatility. So in this case, this would actually most likely take us back to the major weekly descending triangle, which is setting up at the 1.35396. So 3 different scenarios where we can look for a setup in US dollar CAD next week. Now we don't have an interest rate decision out of Switzerland next week. So in this market, I would definitely like it if US dollar franc could push into the sell zone before FOMC. If this happened on Monday, that would be great. Great opportunity to short this market and see it hold its range most likely into FOMC. And there's a really nice daily resistance area just here. Now, in this market, I'm only interested in a short opportunity, and it would be from the first upper bound, which means we'd have to either get involved before FOMC, early on Monday or Tuesday, and be out by FOMC. Or if nothing happens on FOMC, we then have a clear run into the end of the week because there's no SNB or Swiss interest rate decision next week. So this is the setup I'm looking for in US dollar franc. It is a short from the daily resistance in the sell zone above the 0.79255. On the multi-charts, you can see why I really only want to be looking to be short, because we are still trending down in the higher time frames. And if we get a weaker US dollar from FOMC, I definitely don't want to be stepping in and trying to buy this down here, because we could break this major monthly or weekly trend line. So this is the opportunity I'm looking for next week, but it either need to be early on Monday and Tuesday and out by Wednesday evening, or it would be from Wednesday to Friday if nothing happens on FOMC. Now, New Zealand dollar has a really interesting technical pattern which you need to be paying attention to going into next week. But if we just look at the buy and sell zones, we have a really nice key area of resistance in the sell zone and a really nice key area of support in the buy zone. However, this would be, predicated on FOMC not really doing much. We don't have a RBNZ interest rate decision next week. So it really is just FOMC. So if we get a test of the upper bound and this key area of resistance before Wednesday, maybe early Monday or Tuesday, I would look for a potential range hold trade before FOMC, and same potentially to the downside. But I would want to be out of this by FOMC. Now, here's what I'd be looking for post FOMC. In this specific case, if we get a bearish outcome for the US dollar, I would go and look at euro dollar to the upside, pound dollar to the upside, US dollar CAD to the downside, Aussie dollar to the upside. That would be my preference, one of those 4. But if we get a very, very strong US dollar from FOMC, US dollar yen to the upside as a breakout is what I'd look for, and New Zealand dollar to the downside, because we've got this inside week. But notice how we actually have this head and shoulders set up. And we came down and we tested the neckline of the head and shoulders, but we held it. Now, why did we hold it? Because nobody wants to put huge amounts of money into this before FOMC. They want to see what Jerome Powell is going to say. So going into next week, you've got to think there are a bunch of traders who bought this and they've got stop losses here. Now, if for whatever reason the Federal Reserve come out hawkish, they are going to most most likely massively rug pull these New Zealand dollar longs. And below this level here, which is last week's inside weekly low, I think we could see a very strong liquidation if we get Jerome Powell coming out unexpectedly hawkish, talking up the dollar, talking up interest rates and future rates and the future inflationary outlook, which is absolutely something that can happen next week because we've already discussed the maths on crude oil from JP Morgan. So if you get a very bullish outcome from the US dollar, it would be the breakout of this weekly low in New Zealand dollar I would look for post FOMC. And it would also be the breakout to the upside in US dollar yen. Okay, so let's have a look at Bitcoin and Ethereum before we go and look at some of the non-US dollar pairs setting up in Forex next week. Now, previously I highlighted the fact that we were kind of bouncing down here and we're looking for a move into the inside monthly high. And we did get that push up, but look at how we're kind of sitting around this level now. And in fact, we're forming this wedge pattern in the 1 hour time frame. So we're seeing some indecision here, but this is not unexpected because we've got FOMC next week. And if we do get that hawkish turn from Jerome Powell, which I suspect we probably will, but again, I'm prepared to trade it both ways, then what we're most likely going to see is not just a breakout, and this could actually break out before Wednesday, but I would say more importantly, looking for a breakdown back below the 75, let's say 76,000, which is this monthly high. Because what that's going to do next week is if we get FOMC and we get a bullish outcome for the dollar, if we see Bitcoin selling off down below here, next week is the final week of the month. And that means we're going to close next month with a pin candle back inside the prior month's high. That will most likely set up further downside heading into next month. And that would almost certainly see the next leg down into the bear flag low over here at 60,000, which we've been looking at for the last few weeks. In fact, longer, ever since we started to consolidate here in Bitcoin. So the opportunity I would be looking for is a break down below the 75.98 or the 76,000. And then I would look for a potential retest, and you could look for the head and shoulders up here. That is the opportunity I think is best looked at in Bitcoin. We do have a 70,566, which is actually a range low. We're inside of range, but below there, that would open up the prior low down here. But that would only really happen most likely next month. Any kind of sell off next week would close the month week, give us a higher wick, and then the follow through month would be next month. Next is Ethereum. Now we have a very similar setup to Bitcoin in the sense that we had the inside month last month. But notice how when you get a contraction of volatility we've been discussing, you usually get an expansion of volatility. Did we get that when we broke the monthly candle high? No. So this is a very bearish sign for Ethereum because after a period of consolidation, you would expect an expansion of volatility if this is going to start to trend to the upside. The fact that it kind of attempted and couldn't even break through that narrow range high, that actually tells us we're probably heading to the downside. And that's not completely unexpected because this is all in the context of a big bear flag. So I do think we're coming back down to the bear flag low and then probably onto the 1530 in Ethereum. We currently have a wedge inside a wedge. So just like Bitcoin, I would be waiting for FOMC. If we get a bullish outcome for the dollar, this will break out of the 4-hour wedge. You could look for the pullback and the move down to the range low, near-term range low at the 2174. But once we go through the 2174, and most likely next month, that would actually set up the next monthly candle down. We would end up with a wick on this month, and then we would be looking for the follow through month next month in May. So the first non-US dollar pair I want to have a look at is Aussie yen. This is a pure breakout trade next week. We've discussed how the Japanese yen is on the verge of a major breakdown, but let me draw your attention to the monthly time horizon here. This is a range that goes all the way back to 2005, and we've just started breaking out of this. And if we are on the verge of an inflationary regime, which is what the Forex market and the portfolio selection is showing, then we're going to have the most risk on currency, the Australian dollar, versus the Japanese yen, the most risk off currency. This is the pair which is most likely alongside US dollar yen going to significantly break higher. And look at this on the 4-hour time horizon. This is called a high tight flag. This is where you start to consolidate after a strong move, and you can see how we're actually starting to form higher lows. So although we're consolidating, this market can't even put lower lows in. These are some of the most explosive chart patterns you can find. And again, this is why I said if the BOJ or the Federal Reserve or a combination of both of them don't do something to put this back in the bottle, the Japanese yen is facing a big sell-off. So at the very least, you know, if you wanted to break out trade it, then above the 114.298. But this chart should show you that buying the Japanese yen at these levels is very high risk. EurCad is an EU major versus commodity currency. So as discussed at the beginning of the video, in terms of portfolio selection, this is a market I only want to be short. What I like about this is we have the left shoulder of a kind of head and shoulders setup here, which sits right in the sell zone, which is above the 1.61278. And at the same time, for those of you who have downloaded the free strategy guide, you can see this is a rip and flip setup where we rip back higher into the moving average and we have this confluence with the left shoulder, and I'd be looking for a flip at least for 1 or 2 days. But this is the kind of market where you could actually get that swing trade to new lows and even further. But for me, in real time with members next week, I'll be looking for that 1 or 2 day flip from this key area of resistance in the sell zone in EurCad. EurUsd to the short side is another EU major versus commodity currency. So I would like to see this push up, move into the sell zone, which starts at the 1.65200. And we also have the moving average here. So this is a really nice rip and flip setup again. Now we also have really nice trend lines, which you can see more clearly if I move over to the multi-chart. So a breakthrough here into the 1.65200. Even if it just pushes through the trend line a little bit intraday, that's not so much of a big deal. I would be looking for this to start to fail in this area. And we also have the 20 period moving average in the daily time horizon sitting right there. So the 1.65200 is a really good place to look for a potential short in EurAusd next week. Euro franc is 2 EU majors, and both of these currencies should underperform in an inflationary regime. And when you get 2 weaker currencies, we can make the statement that the range should hold, this should chop around. So this would be a range reversal play between 2 currencies which should both suffer in an inflationary regime. And what I like about this is we have a really nice key area of support at the bottom of the range because we came into the range to the upside. And it sits in the buy zone below the 0.9155. So any push down below the 0.9155 and into daily support down here next week, this is where I'm going to look for a 1 or 2 day reversal to the upside in Euro franc. New Zealand CAD is 2 commodity currencies versus each other. So what I'd look for next week is any pullback into the key area of resistance in the daily chart, the 0.8136. In the sell zone, this is where I would look for another potential sell-off to the downside. I say another sell-off because we looked at this previously. You can see in the 4-hour chart, the sell zone starts right here at 0.8119. And just above it here, we have the prior high, the daily resistance we looked at. But if you remember, in a prior weekly Forex forecast, we looked at this setup where we had this potential pullback into this monthly low. And this was where we were looking for that kind of sell-off. So I would be looking for the same setup into this area for another sell-off, making the statement that this market should continue to range because 2 commodity currencies should both be strong versus other currencies in an inflationary regime. One caveat, we do have the Bank of Canada on Wednesday. So if the Bank of Canada come out and they slash rates or do something really unexpected, then you might want to sidestep this setup because now you're going to have a catalyst in the other direction. But if we get this before the Bank of Canada on Wednesday, or if the Bank of Canada passes uneventfully, this is something that I'm going to be looking for next week. And the final Forex pair we're going to look at is Euro Pound. Very simple rip and flip setup. So ripping higher into the sell zone, into the moving average, and really nice daily resistance right here. This is where I'll be looking for a 1 or 2 day reversal to the downside. The 2 EU currencies which should underperform in an inflation regime paired against each other. So again, we should expect this pair to continue to range in an inflationary regime. So let's have a look at crude oil before we wrap up the video with gold and silver. Now, we've discussed the fundamentals of crude oil right at the beginning of the video. And going into next week, we also have an inside week in crude oil. So what have we seen? A contraction of volatility. What follows a contraction of volatility? An expansion of volatility. This is trending higher on the daily. We're above the monthly key area of resistance, which we pulled back and tested as support. This is a market I would only want to be long technically and fundamentally. And the breakout level next week I'd be looking at is the 101.66. This is the breakout of this channel. because we have more than 4 points here. And also the fifth point over here, 1, 2, 3, 4, 5, is not just the high of the channel, but it's also the high of last week, which was an inside week. So I would be looking for a break next week above the 101.66, and that is where we can begin, not just an expansion week, but also a run up towards the 124 in crude oil. Okay, so wrapping up the video with gold and silver. What I like about gold and silver next week is they're setting up in a way that we could trade them regardless of the outcome of FOMC, very much like some of the other Forex pairs. Now, when the US dollar goes higher, gold can sometimes go higher, although it tends to be flat to down when the dollar's higher. But silver, when the dollar goes higher, very rarely follows the dollar higher as well. It's either neutral or very down. So what this does is this sets up a bias going into next week for me, whereby if we get a bullish outcome for the US dollar on FOMC, I will be looking to short silver. And if we get a bearish outcome on FOMC, I would prefer to buy gold. And the setups here are pretty straightforward. We have an inside week, and look at this contraction of volatility on a monthly basis. We've gone absolutely nowhere this month. I've been saying to you, we're in no man's land, and look at this, absolutely no movement here. However, that could all change next week. So a bearish outcome on FOMC for the US dollar, I would look for the breakout above the inside week high in gold, which is the 4832. And that would set up a run potentially back to the all-time highs in gold. However, I would be looking at 5,400, last month's high over here, as a near-term target before we get to the highs. So that's what I'll be looking for in gold after FOMC next week. And therefore in silver, we have exactly the same setup, inside week, very, very tight month, currently inside last month. And in silver, we also have this kind of range setting up here because now we've got 4 points. So if we get a bullish outcome from FOMC for the dollar, instead of shorting gold, I would look for the breakdown below the 73.908. And that would set up the next leg down to the range low, which is back at the 64.01. So this is the range we're currently trading in. And any breakdown below the 73.90 next week, after a potential bullish outcome from FOMC, that will set up the breakout trade back towards the 64 level. So that is it from me for today, guys. As always, I hope you enjoyed today's video. And if you did, why not consider joining us in the GMT trading room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge- platform is included with every GMT membership.